Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys we will take a look again at the euro currency because our former analysis on the Japanese yen is still valid, and in fact the big picture doesn't demand any update right now. So since we haven't spoken on euro currency approximately for a couple of weeks, now is the time to update our current view on the euro currency. Well, in general our long-term analysis stands intact and valid, and we think that euro will be pressed, will stand under pressure the nearest probably 6-12 months, due to the reasons that we partially have discussed a couple of weeks ago. Partially I have mentioned them in our text version of the weekly research, this current weekly research. So in general, the most interesting currently on euro currency is the fundamental part, the new CFTC data that we also have published in our research. But on the short-term perspective, the situation looks really sophisticated, because if you will read the fundamental part of our analysis, you'll see that currently there are, as the fundamental data has appeared, as technical data that stands rather contradictorily, and that leads to some unstable and nervousness price action, especially on the lower time frame charts, on the daily, on an intraday chart. And right now on daily chart, it's really big question whether the upward retracement that we have expected to get and that we have discussed previously will happen, or it will not happen. Here we have as supportive moments for this probable upward action as moments that point on just downward continuation. The supportive moments are still the same, so that is butterfly pattern that we have just discussed. Also here guys, at 134 even is the weekly minor 618 ABCD target. Also we see untouched monthly pivot point, bullish trend. So some, as you can see, we have the patterns that suggest probable retracement, and if this retracement will happen, it probably should happen to the 135 area, so monthly pivot point that has been tested. That is also 50% level that euro likes most of all. So euro currency likes to show the 50% retracements. But that's just the first part of the picture. The second part of the picture is the recent market mechanics, market action, that makes us think that it's not really beautiful and harmonic as it seems at the first glance. And if you take a look what we have, first of all we have some sort of the continuation consolidation that looks like the pennant pattern that's forming on the daily chart, and that usually is continuation pattern. Second, except maybe the minor target on the weekly chart, market stands not at the support, not at the reversal. So in fact market is not supported by any solid support moment, technical support, and that also makes the chances on retracement weaker. But major moment here is the price behavior. So take a look what has happened. Market has completed the butterfly, very small bounce up. It's just minor retracement. Here we start to think about the possible double repo buying. What happens after? What is going on right now? So we see that market still hasn't shown any meaningful respect of the butterfly, just some flat consolidation with the small fluctuations. That's absolutely insufficient to say that this butterfly has been respected. Market has shown the reasonable retracement. That hasn't happened. What is going on particularly with the double repo? Take a look. We do not see clear bottoms. The double repo pattern is the pattern that shows the capitulation of the bears when they attempt the final challenge to push market lower. Usually when the double repo forms, the bottoms should be visible very good, and usually the second bottom is greater than the first one, because bears tries to put market lower. This is in fact the final attempt, the final attack of the bears, and when they fail, stops start to work and market skyrocketed in the opposite direction when the pressure of the bears has been destroyed and market is skyrocketing. What we see here, do you see any bearish final attack, bearish final challenge? I do not see that. It's just flat consolidation without no reasonable bottoms, just some fluctuations with the flat action. I do not see here any bearish attacks. It's just pause and indecision. And probably we should not treat this action as the double repo pattern. Of course, although theoretically we have the double repo, we have close above the 3x3, close below, close above again. It's a bit was extended in time, and here is close. First close above the 3x3 and second was only here. So that's not even double repo by the shape and not even double repo by market mechanics. And if the upward action really will start, that will probably happen not due to the double repo. So if you would like to take the long position and trying to trade retracement, do not justify your position by the double repo. Do not rely on this pattern anymore. And here, guys, we have also some fundamental factors that presses on the EUR and doesn't let market to show the retracement. And that this opposite factors, the pressure of the opposite factors leads to some flat action. And in current research, we have made the assumption and suggestion that now maybe the question stands even not with the possible retracement, but whether market will just continue to move lower or it will just turn to some sideways consolidation. Because the strong fundamental data and strong fundamental factors from the US economy and the weakness of European Union economy do not let market to show any reasonable bounce. They press on it. Other factors as technicals and the short-term geopolitical tensions push market high, but any upward reaction finished very fast. So you can see these long shadows. That was really strong pressure on the market. At the same time, guys, signs of possible upward action is still here. First, from the fundamental point of view, we just could mention this recent CFTC data that shows even more part of the net short speculation positions. They very close to the crucial 82% of the short positions in the overall open interest, and that's really significant. Another moment I will show you on the 4-hour time frame chart. So here, guys, it's very difficult to comment this whipsaw action and do not see any patterns or something valid, although you could probably recognize a lot of patterns here. First of all, you could mention possible this butterfly to the upside, okay? This butterfly to the upside. You could mention this butterfly to the downside. You probably could find here even some kind of reverse wide head and shoulders that could be forward or something of that sort. But right now, this is just the suggestions, and it's not time to take the position based on these patterns. Before taking any position, we need some pattern to take. But one moment that is really interesting here is even not that stands not even with this first erasing of these attempts to move high. And take a look. Any attempt has been erased. Moved up, erased. Again, next attempt. But what is interesting, take a look. Market is forming high lows. That could suggest some pressure. That's time for investment is coming, and it really could happen. But to get the final confirmation, to get the final confidence that's really will happen, we need the pattern. because it's risky to take the position just based on some thoughts and suggestions, because they could fail. And this fast returning just tells that bears are still strong here, and they really could push market lower very easy. So that's why, guys, in the currently the euro currency really stands under pressure of the different and a lot of different factors, as the fundamental, geopolitics, economical, and pure technical factors that that makes opposite pressure, opposite impact on the market, and that leads to this nervousness action. It's really a whipsaw that really shows just nothing. And that's why, as the conclusion from the current situation, we just could say that chances on the possible retracements still exist, and this really could happen. But we should use this retracement if it will happen, just as the chance for taking the short position, because downward action will continue. But before taking any action, we need the pattern. At the same time, this pressure, this flat action, and inability of the market to show any reasonable respect to this support area makes me think that bears are strong, and this will not be surprised if market just will continue move down based on this pennant pattern. So market could really just continue move lower by this breakout. That's really could happen.